everyone. We would like to welcome you for our Q4 FY24 result press conference of Federal Bank. I would now like to introduce our leadership team, Mr. Shyam Srinivasan, MD and CEO, Mr. Harsh Dugar, Executive Director, and Ms. Shalini Warrior, Executive Director, and Mr. Venkatraman Venkateshwaran, Group's President and CFO. Before we invite our MD and CEO on stage, I would like to everyone to request to mute their microphones. And if you have any questions, please drop a message on the chat box or towards the end, raise your hand, state your publication name and your name, and then raise your questions. I would now like to request Shyam sir to take us through the results.
Good afternoon, everybody. Thank you for joining this call. This is the first of FY25 to close out FY24. You may have had a chance to go through the results that were published a short while ago, reviewed the numbers, and I'm sure you have a few questions. Let me just only call out the most important ones, and then we'll discuss the others in greater detail. FY24 was a strong year for the bank on many counts. You've seen a year-on-year growth of almost 25% on net profit. And Q4 in particular was operationally probably our strongest quarter. Some of the numbers that you may observe have seen some sort of wrinkles only because we've taken some one-off impact on account of certain wage-related matters in terms of pension costs. Back that out, it's a strong quarter. Sequentially, we've been growing profits considerably every quarter. This quarter too, while the reported number is 906, if you put back the 162 crores of one-time pension hit, it continues to be a very strong four-digit number in net profit. Margin did expand. NIM expanded a bit. NII was its all-time high. So effectively, the quarter that went by also saw strong performance on the credit front. We've been fairly consistently making sure the credit quality remains, I would say, pristine, and Q4 was no exception. In fact, Q4 was probably one of our strongest credit quarters in terms of slippages being even lower than the recovery and upgrade. So on balance, I'd summarize saying the quarter that went by was strong. We're entering FY25 with reasonably strong momentum. We believe our market share gains are sustainable and growable, both on assets and on deposits. The structure and the tenor of how we grow businesses in assets or in deposits will depend heavily on both the opportunity in the market and where we see some strength formation where we can sort of grow that faster. That said, our outlook for FY25 looks quite positive. So with that, I'll just stop the commentary. We'll take questions from all of you. My senior colleagues, as Archana mentioned, are on the line.
Thank you, sir. Now I'd like to open the forum for questions. Please state your name and publication name and raise your questions, please. Piyush, you would like to go ahead with first?
Yeah, go ahead, please.
Yeah. See, the last time also, you need to unmute us first for us to ask questions. So, Shyam sir, good afternoon. Am I audible?
Yes, Piyush.
Yeah. Sir, so in terms of Q1Q, you talked about how this employee wage pension related, provisions made us Q1Q, the PAT was a bit down. But in, the last quarter, it was around 1,006 crore. It is now 906 crore. You're saying that around 200 crore odd is spent on pensions, employee expenses. So exactly, sir, other income is also down. What exactly is the core driver for Q1Q? I have one more query.
I think you should, the two different things. The expense part on pension was about 162 crores. So that is one element. I think the other income part, you have to see it in light of the provision saw a 67 crore release, which was taken from provision and offset against the interest in the other income. So effectively, that had no P&L bearing. That only has a line shift, because in the previous quarter, we had created a provision for some reversal, which we used this quarter to reverse it. So there's no P&L impact. The P&L impact for the quarter in two successive quarters is the 162 crores you saw in the pension line.
Okay. So basically, it's because of the pension-related expenses that the Q1Q profit is on. Sure, sir. Sir, separately, there have been a name of a private banker who's been talked about in reports that he may take over as the bank CEO. From your side, has the bank submitted the candidate names to the RBI for succession? And if yes, whether external candidates are also being considered apart from internal candidates?
Piyush and to many others whose hands are up, I suspect this is a question you all want the answer on. I was on air a few minutes ago and I'll repeat myself. Be sure you will hear it the moment any regulatory clearances come. Just to clarify, there is a board established search panel which is doing its job and doing it very well. They have a slate of candidates to choose from. It could be from internal, it could be from external. They are submitting, they're in advanced stages of submitting to the regulator, and then the regulatory process kicks in. So there are lots of steps in the process. Anything else is clearly in this realm of speculation. I or my board or anybody would not be able to comment. All we can say is the process is well underway and it's a very elaborate and a very diligent process that is going on.
By when do you expect to submit the names to the RBI? Is Manian sir a part of it, the list?
I can't quite comment on when we will submit, but they are in the advanced stages. I think because we just have to work backwards. We are, we are somewhere in the time zone in which the submissions should go to RBI.
Manian sir a part of it?
Good try. You can keep asking me in many ways, Piyush.
I'll come back. Thank you. Thank you, sir.
Thank you, Piyush. Pragati Oberoi from NDTV Profit has some questions. Pragati, please go ahead.
Hi, Archana. Thanks so much. Hi, Shyam sir. Last quarter also I asked this question, and it's somewhat in line with others' questions also. I really want to understand as to how many external and internal candidates you're looking at and planning to send. I noted your last answer on record, but I still want to understand is because the when we got this information, we knew that you were looking at two internal candidates and at least one external. That was the plan, at least in place, to send three names. So is that still on? That is one question. The next on numbers I will ask after this.
Pragati, I know you are one of the most active follower up and you write a lot of script around this.
You read that?
Let me just share with you what I've been sharing in every platform.
Okay.
The board has set up a very effective search panel. They are doing their job. The board has a long list of people to choose from in the market, including our two senior internal candidates. And that process is underway. When the process is complete, the letter will go to RBI. When the letter from the regulator comes in, we will make sure that we flash it on the exchange and share it with everybody after the board approves. This is absolutely what is going on.
Someone's mic is, I think, Arjun, can you mute them, please?
Yes.
No, they muted you by mistake. You don't mute Pragati.
Arjuna, someone else mic is on. Can you mute them? Don't mute me, please.
Yes.
Yeah, I'm so sorry. You were saying.
No, so I just wanted to mention, and I think that sort of settles it. There's incrementing. I know you're all very active and keen reporters who will try to quiz us in many ways, but these are the absolute hard facts, and you have to rely on this.
Okay, Shamsa, my next question is on the numbers. I want to understand the IT spends of the bank for this quarter and FY24, and how much are you planning for them to rise at least in the near term, if not medium term? Just a little bit of understanding of that, please.
Good question. I think in most of our investor calls, we've always pointed out, one, the bank doesn't shy away from spending on IT. We believe it's a good cost. And we have been every year sequentially increasing our spend as a share of our overall expenses. I think this year getting close to 6.5% to 7% of our expenses. The more desirable space will be closer to 8%. So over the next financial year, as in the year that we're sitting in and the following year, we think we'll get there. On all platform upgrades, on all areas where we are dependent for technology to be the prime driver, which in today's world is almost everything. We are very actively invested, and if there is a trade-off between spending on that versus not spending, we will do that more. So That's
Okay.
that's a given.
So one clarification, it's 6 to 7% of your overall expense
Six and a
of
half, 6.5 to
It's
7.
around 6.7% for FY24.
Okay.
And like Shyam said, desire to take it up to close to 8% over the next few years.
Over the next few years, not particularly
Yeah.
FY25 you're looking at.
No, it will take maybe a couple of
I'll
years.
give you a sense of how this works.
Huh.
Remember, the absolute denominator on expenses are going up every year, right?
Mm-hmm.
So your spend in technology, when it goes up 0.5% on the absolute denominator, which is close to 7,000 crores, you're talking about hefty. You'll have a digestion problem if you spend more than that on technology because you can't implement projects. So it has to be see these things happen sequentially and not not like a jatka.
Okay. And just to understand, sorry, I have a last doubt here. What percentage of this, or what percentage of cost to income is this IT spends?
So our total cost to income is roughly in a steady state around 50.
Huh.
If costs are 50%, you can work the math backward, right?
Okay. Fair enough. Fair. Okay. Thank you so much, Hamza. Thanks a lot.
Thank you, Pragati. Next up is Siddhi from Reuters, sir. Siddhi, please go ahead.
Hi, sir. One follow-up from what you answered to Piyush's question. You said that the search panel is at an advanced stage. Any timeline you could provide on by when can this panel submit their recommendations to the RBI? Any approximate timeline?
Siddhi, I think you didn't hear the full lines I mentioned, right? I said they are in an advanced stage and the timelines are due over the next few weeks. It'll happen.
Okay, so fair enough. My second question was on the NIMS. Sequentially, they have improved a bit, but and you also said that you have the capability of maintaining and growing your market share both on assets and deposits. So, wanted to get some guidance on how do you expect this to play up? Any particular guidance on NIMS that you could provide us for FY25 since it's the new year?
Sure. I just want to give you the sense of how we see NIMS. We don't see it in isolation because sometimes it can mislead. NIMS and back that off of credit costs. So risk adjusted or credit cost adjusted margin is a better measure of the goodness of a portfolio. If you take Q4, our NIMS were 3.21. Our credit cost was 1 basis point. So you can understand that NIM minus credit cost for Federal Bank was 3.20. There can be another bank A or B or C which may have a NIM of 3.8 but credit cost of 60 or 80 or 90 basis points. Now you have to make a choice which is a better combination. So I would never request anybody to look at NIM in isolation. NIM in package with credit costs. We think our model works well. And in the years ahead, as we get into slightly higher margin businesses, which means higher credit costs, margin will go up. So credit costs will match up. So, but risk adjusted margin, if we are somewhere between 3 and 3.25 is our business model.
So any number, sorry, could you repeat that?
Risk adjusted margin between 3 and 3.25, we are doing very well.
Okay, so my last question would be on your loan growth and deposit growth. If you could help it with some guidance on that as well, because with RBI kind of trying to clamp down the unsecured growth, any guidance you would help for FY25 on both the loan growth and deposit growth?
FY24 was 20% credit growth. We had at the beginning of the year, so we'd focus between 18 and 20. We think in FY25, around 18% credit growth is possible, subject to the environment holding out as well as it is. We think it's possible, and our market share gains will be pronounced.
And on the deposit side?
And if you're growing credit at that percentage, you have to make sure deposit growth is matching up. And we think if a credit goes 18, between 16 and 18% deposit growth is very possible.
Okay, sir. Thank you.
Thank you, Siddhi. So we have next up with a question from Manojit from Business Standard.
Sure.
Please go ahead, sir.
Yeah, hi. Sir, was there a trading gain in this quarter?
No, nothing pronounced, nothing at all.
No trading gain. There was a provision write back of 94 crore.
I think you missed it, Manojit. I did mention the provision write back of 67 crores was because of, you will see that as an offset on the interest other income. So it's a line shift.
Okay. And sir, what was the on IT? What was the IT budget for FY24, and what is the percentage of that has been spent?
The entire budget was spent.
In fact, we spent a little over what we budgeted.
Sorry.
We spent 105% of the budget.
105% of the budget. Okay, fine. Thank you.
Thank you, sir. Next up, we have Pushpita Dey. Pushpita, please go ahead.
Hi, sir. This is Pushpita from the core. So, just a follow-up question for the expenses on the IT infrastructure. Could you please give us an idea how much the IT infrastructure spend has gone up over the last 2-3 years? Just an estimate. As you mentioned, this time it has been around 5 to 7%. So, how much it has increased over the years?
Yeah, in FY21, it was roughly around 4.5%. The cost of IT spend as a percentage of OPEX. That has now moved to, like I said, 6.7%. And the trajectory is to keep it around 8%.
Okay. Thank you, sir.
Thank you, Pushpita. Any other question, Pushpita, or we can move ahead?
No, we can move it. Others have been addressed already.
Ankur, thank you. Ankur Mishra from ET Now, sir. Next question up. Ankur, please go ahead.
Hi, sir. Can you hear me?
Yes, please go ahead.
Yes.
Yeah. I just wanted one more clarification that when you have said that you are going to send the names to Reserve Bank of India, is it the first time that you will be shortlisting and sending the names, or you are doing it again?
No, I mean, when the regulator advised us in January, we are going through the process now. How many times can we have that?
No, I just want, that is what I'm saying, sir. Just a clarification, whether it is the first time that you will be shortlisting and sending the names to Reserve Bank of India. Is that understanding correct?
RBI advised us in January. The search panel was set. The search panel is on its job. When it's ready, it will send the list.
All right, we'll leave it at that. Thank you.
Thank you, Ankur. Next, we have Roshan from Mathrubhumi. Roshan, sir, please go ahead.
Hi, sir. This is Roshan from Mathrubhumi.
Hi, Roshan.
So, two questions. One is, shall we expect any top-level recruitment over the next few days, other than this MD's position? That means someone joining as a president or executive director?
No, I mean, I don't know. If you know something, please tell me.
And last month, the RBI has directed to stop issuing co-branded credit cards. How was the impact of that in your business?
No, those card issuance we had stopped almost immediately.
Okay.
We'll come back to it in the next 3-4 months once we get the appropriate regulatory approvals. We're working through the details to share with RBI and get the necessary clearances. That is, see, credit card as a share of our total portfolio of 210,000 crores is 3,000 crores. Out of that, co-branded credit card is a smaller percentage of that share. So if that grows slightly slower, which it will for the first half of this year because of the temporary hold, it will not affect the overall picture materially because there are other businesses that are compensating for it.
And if you allow me,
are growing quite well.
Okay. If you allow me, I have one more question. Over the last 2 years, I think you are adding new branches aggressively. Do you have any target for the next 2 or 3 years? How much will be the total branch network?
I think we have said 5 and 7% increase in the network every year is desirable. In FY24, we added almost 10%. FY25, between 7% of increase in network is possible. We will, of course, keep calibrating this to the overall expenses and of where we are adding branches. But safe to assume between 5 and 7% increase in our network is quite possible.
Thank you. Okay, thank you, sir. Thank you.
Welcome. Thank you.
Thank you, Roshan. So next question will be from Atmadeep Ray from Economic Times. Atmadeep, please go ahead.
Yeah, thank you. Uh, I need one clarification. You mentioned that the pension-related cost would be 167 crore, but in your presentation it was mentioned 162. So which one is correct? That is one.
No, I said 162. I didn't say 167. I said 160.
Okay, so it's my mistake then. I heard you wrong. Sorry. And next question is, when you are sending the names to the RBI, how many people would be in the list? 1, 2, 3, 4.
Atmadeep, I know all of you are very keen. Even I am keen to know when it happens. When it happens and when the time is appropriate is all we can share. As of now, the process is underway, Atmadeep.
Thank you. That's much for me. Thank you so much.
Thank you, Atmadeep. Next question is from Gopika from Mint. Gopika, please go ahead.
Hi, good afternoon, Shamsa.
Yes, Gopika.
It's hard to.
Sorry, your line is not coming through well.
Am I?
Can you just continue talking, Gopika? There is some discrepancy in between.
Yeah. Am I audible now?
Better.
Yes.
Yeah. So I wanted to just understand on the co-branded credit card side, is there a rethink on the fintech partner that you're looking at? And secondly, there were some reports that RBI has asked banks to review their, the gold loan portfolio which they have, the gold loan lending that they do through fintech partners. Again, on that count also, is there some review being undertaken?
Okay. Fintech partnership is an evolving space. Both us, our engagement with them, and they themselves, and so are the regulations. When we started FY24 and when we ended FY24, there were certain material change in regulations. Many of us have readjusted to it. So have the fintechs. I believe once those are set right, the momentum will be back then and it will keep growing. What share of growth and how much of growth depends on how much we want to, sort of partner that. Organically, I think Shalini mentioned on some platforms, and I can confirm that organic growth in credit card and gold loans is not an either-or strategy. It's a both. It's an and strategy. So we are growing organically credit card. We are growing organically our gold loan businesses, and that is growing quite well. Fintechs, once we put those necessary guardrails in place, whatever growth that enables will continue. We are not saying no, but certainly it will be, if we were growing at 60% fintech led and 40% internal, it will be ulta, maybe 75% internal and 25% fintech led.
Okay. Going forward.
Yeah.
Oh, thank you.
Thank you, Gopika. Next question is from Ashish from Press Trust of India. Ashish, please go ahead.
Hope I'm audible, sir.
Yes, you are.
So, a small clarification. You said credit growth aim for FY25 at about 16 to 18 or 18 to 20. I think.
No, I didn't say 16 to 18, nor it is 18 to 20. I said 18, but you can pick the number. But yeah, around that number.
So about 18% in FY25, sir.
Yes.
Okay, sir. Thank you so much, sir. And sir, as these spends on IT related aspects go up, what would be the impact on the cost to income? And secondly, sir, you mentioned about budget like not being so much of a constraint really for IT spends. So how much of it is because of the regulatory asks really, and how much of it is in a way more voluntary in nature, sir?
No, I think all spend is what we have to be doing. Sometimes it meets the regulatory requirements, but it's not only to meet regulatory requirements. We are here to make sure that our standards are meeting every regulatory requirement and is delighting clients, right? So the thing about technology spend, and all of us are in the same world, it's a never-ending game. Whatever you do, it won't be enough because they will come up with the next version and the next upgrade, and that will certainly be better. So we have to keep constantly looking at it and putting might behind it.
Answer its impact on the cost to income, sir.
See, this is in business, you have to figure out what is a good cost and what is a bad cost, right? We treat this as a good cost. So we have to slim out something else to make sure this is accommodated.
Okay, sir. Thank you so much.
Thanks.
Thank you, Ashish. Next up, we have Ben from New Indian Express. Ben, sir, please go ahead. Ben, sir, are we audible?
Can you hear me?
Yes, sir. Please go ahead.
No, this is further to what Gopika asked. What is your gold loan book? Can you give me in absolute terms? And how much of that comes from through fintech associations?
Gold loan book is about 26,000 crores. Harsh, 25,000 crores?
It is 25,226 crores. We grew about 27% last year.
Little over 25,000 crores, Ben.
Okay. And how much of that is coming organically and how much is through the fintech association?
80% plus is organic. 80% plus is organic.
Okay.
Of the AUM, yeah.
Thank you.
Thank you, sir.
Archana, we have to, there are no other question. I have something else to dial into. Is this anybody else pending?
Yeah, Siddhi, you have raised your hand. Any question on that? Follow-up question?
Sorry, no. I'll lower my hand.
Sure. No problem. Any other questions, guys? Else we will end the press conference.
Thank you all. All the best. See you again in the next conference. Thank you. Good luck. Thank you.
Thank you. Thanks.
Thank you
so much.
Thanks, everybody.
Thank you.
Bye-bye.
Thank
See ya.
you. Bye.